Thanks for watching. Mm. I hope it's going to be a prosperous year for all of you, and hopefully more rewarding than 2016 anyway. More rewarding for me because I'm happy to put 2016 behind me. Ken, 2011, what's that mean? Did I do something wrong and put 2011 somewhere? I don't. Anyway, guys, Nigel and I sort of were discussing our performances in 2016. We started round about September, to be honest. By the way, if you've got any questions, just fire away. Nigel's online here as well. He's John McFarlane _1. So any questions directed at me or Nigel, just type away. Or in general, what we're talking about, just fire away, guys, and we'll answer them as we go along. So anyway, Nigel, we started talking about. Well, Nigel mentioned his performance in 2016 in February and reckoned that he could quit then and just put his feet up for the rest of the year. And I think he wishes he had. And certainly around September, October, I realized I needed a pretty spectacular November and December, or I was going to be in the red for the year. And in fact, November and December weren't too bad across the three strategies that I use. And although I didn't end up in the black, I did end up in the red for the year, mainly down to three pigs. Investment wise, I, I'm a long-term investor as well, and I hold quite a few different stocks and shares and different ETFs, etc. Just diversification. And in Forex, with one strategy and trading, a dozen securities or so, there's a bit of diversification there. But I like to just spread it across a few different strategies as well. I know Nigel mainly sticks to one central strategy. Yeah, I think it has been. It's been horrible for three pigs since second half of the year, really. Um, so Nigel pretty much sticks to one against across many different currencies, which is that's grand. And I try and stick to. I try and have less currencies and more strategies. So either way, we do diversify, and typically over the year, I find that that diversification usually balances out. And this year, it's just been a constant struggle to try and catch up, mainly with a bit of intraday trading to try and compensate for my sort of longer time frame three little pigs trading. But anyway, the point is, I'm glad to see the back of 2016 and hopefully see a better return in 2017. But anyway, the thing that's the sort of the main observations that Nigel and I sort of, well, I got from our conversation anyway, was that um, the strategies. There's two main points. Was the strategies, and the first is that the strategies they're always going to let us down. And Nigel and I don't really sing from the rooftops when the strategies are performing great. We blow the trumpet a little, but we're not like most people are only as good as the last call or the last trade or whatever. So we tend not to do that too much. So the first is we're aware that strategies do let us down from time to time. And in my case, it's the three little pigs this year, which just weighed on my monthly and annual returns in the end. And the pivots and no indicators almost made up for it at the end of the year. But the second point was that um, the key here really is for during the bad times, so that we're around for the good ones, is that good, accurate, and consistent risk management was the key. And I think Nigel wrote a little piece as well, that kind of mentioned that most traders have their own way of sizing trades that works for them, but even those traders have a tendency to use position sizes that are too big relative to the size of their account. So when they come to open a trade, they don't take the time to calculate the correct lot size. They enter one maybe based on their gut feeling or what they used on the previous trade, etc., etc. So what happens is that if the account equity is going down, position size is staying the same, and the risk per trade is actually increasing. So this just accelerates the pace at which they'll lose money on the losing trades. Of course, one of those might win, but the tendency is that, when you're on a bad run and you start increasing your size, that you start to try and claw it back, and you just accelerate those losses. So, and that's one of the biggest causes of drawdown, is just not looking after the account sizing correctly. So, this is where we reckon the bust accounts come from, and then people aren't around to take advantage of the good times. So, good, accurate, and consistent risk management is key. And this basically means that making sure your lot size and pound per point is correct. So what happens is typically, I'll just go in to put a new order in here, and um, what happens is we'll just go over to, guys, I have to be honest here. This is a normal trading account, demo account, and I set it up just for the purposes of testing this, testing and using this EA. I'll use it on a spread bet account, and I honestly don't know how to correctly calculate lot sizes on a dollar account, on a traditional trading account. But I know it's not easy, especially when you trade in something that's not in the base currency of the US dollar. So if you trade in Euro JPY, I know it's rather complicated, but I'm not going to go into that now, because if you're using a standard account, you already know that. So typically Euro USD. So let's just say we want to go long, and we've got a price here of 1.0488. So we want to set our stops 30 pips away. So we do 1.40, 1.04 for 30 stops away, 1.0459. Sorry about that, guys. Just trying to get my mind around this fifth decimal, which I don't know why people include that. So 30 pips away, and then typically, if we want to risk $30, I think that's right on USD, we would put a volume of 1 in there, and then what usually happens is that, okay, we've gone to 1049 now, so do we want 1059 anymore, or do we want to move it to 1060? And what we end up is just you adjusting all the time based on the price movement. So we've gone to 92 now, so let's go up to 62. But if even, because we decided that we're going to use 30 pips here, okay, we're back down to 1 now, so we're changing again. Even though we're going with 30 pips here, we can see that we're constantly changing our stop loss here. We know the lot size. But if we decided that we wanted to stick with, I can't remember what the original was, 1459, I think it was. If we wanted to stick with that, what we'd be doing is constantly recalculating this volume here. So instead of changing this now, it's gone up to 1445. Will be 30 pips is 63. So we're constantly adjusting just based on the market to try and get into hit. So, sorry, that's for a buy. So the thing is that we're in the real world, what we're doing is constantly trying to get that risk management and the lot sizing to the correct stage. And it's a real pain in the ass. Even on if I was going over to the if I'm going over here and I want to stop loss at 20 pips, so we look to buy here 1.0468, and okay, even now it's just changed, so 69, that's 20 pips, and then I can buy here. So again, that's a simple 20 pips there. So there it's gone again. So again, I have to adjust. Even, you know, if I'm just checking out a few other things and whatever and coming back, you can just see in the space of a few seconds that we're changing things. So what's the point here? The point is that this isn't a great way to be calculating your trades every single time. It's just so hard to get things right. And that's why since Q4 last year, we've been looking at an alternative to this. I'm just going to flick over here. So this is the trade manager that we've been working on. And just, I think, just flick through a few of the options here first. So in the properties here, you'll see that we've got a few options. So we can use here either the current balance or the equity balance. So that just means whether we use the current balance here without any effect from the open trades, or whether we use the equity balance, which takes into account the open profit and loss. So pretty straightforward. And everybody has their preference. I haven't met any sort of industry norm here. I don't know if anybody has one or not. Then we can set up a percentage of our account that we want to risk on each trade. So 1% is the default. Or we can set a fixed amount of, say, of £100 or $100 or whatever. This risk profile here is percentage or fixed amount. So do we want to risk a percentage of our balance, or do we want to risk a fixed amount of our balance? So if we want to, I'll just use fixed amount. We can use percentage and it will just calculate. Go ahead, I'll use that. We can change this anyway when we're placing the order. The stop option we've got here, we've got a pip stop, so you can have like 20 pips as a default, 30 pips, 40 pips, whatever you want. Or you can have a price stop. If you use a pip stop, then you can have a default here, so let's say 20 pips. If you use a price stop, then this value becomes irrelevant and you'll enter a price. Pip target, this option here is take profit, so we can have a pip target, so we can just put in a default here of like 1,000 pips. The fact is, once we've placed our excuse me guys, take a drink of water. Once we've placed our order, we're going to manage these trades like we do any other trade in MT4. So generally, for me, I use a pip target of just 1,000 pips or something, and then manage the trade as I do normally. But you can have a price target here, which just means that you're going to specify a price when you're trading, or you can have a target percentage. So, for example, if you've got a pip stop of 20, if you make this 200%, by default, your target will be 40 pips away from your entry, so double what your pip stop is. Likewise, if you're using a price stop here, if you put the price 34 pips away from your entry when you're opening your trade, then your target percentage, if it's set to 200, will be 68 pips. And sorry, this default, the take pip profit, you will only fill it in if you put pip target and the default percentage here. Sorry, you'll put if you put the target percent. So I would just go for a pip target at the moment, and we'll just put 100 pips. So that's a default 20 pip stop, default 20 pip target there, and we've got the 1% of our current balance. So what does that mean? Okay, so typically I'll just go through a few scenarios. So what you might do is come in here. So we can see we've got the 1%, let's it's not took the default. No, hang on guys, I'm not sure if that default's come over onto this. Just let me check. Pip stop 20. I'm not sure how to do that other than maybe taking it off and then putting it back on again. Oh no, because we've gone back to the defaults. Okay, it doesn't matter. I'm just going to go through this. So I'm just going to use a fixed amount here. So £100, $100 here. So it calculates the actual trade size, the trade value for us. If we went for a percentage here and used 1%, you can see that because the balance is this, it's calculated that percentage for us. So every single time it gets the value correct for us. Now, if you're a trader that trades with a 20 pip stop every single time you trade, and your target is 40 pips, you can just set these defaults up. So typically what you would do is a new order, you'd work out the volume you want, you'd put in your stop loss. So here let's go for 20 pips. So 1.0471, take profit 1.0510. I think that's right. Then you would calculate your volume. I don't know what it is here, but basically you have to go away and do your calculations, and then you will buy at the market. And luckily the price didn't move there, so we didn't have to recalculate. If you're going to use the new Forex Useful Risk Manager, and you know you're going to risk $100 on the trade, and you always use a 20 pip stop and a 20 pip target, there's only one thing you have to do here, and that's click buy. And if you do, open price 491, take profit 531, and 10471. Actually, that's yeah, that's right. Yeah, so 20 pip stop and a 40 pip target. Lot size 0.5 has been calculated automatically here. So all done automatically for you there, guys. No messing about, no calculations, no nothing. I don't want to come out. That was obviously for a Euro USD. So if we just go over to USD JPY and we try and do the same trade. So we're just going to use a 20 pip stop, 40 pip target again, and we sell. And there we go, correctly calculated the lot size for us of 0.58. And we've got the correct values as well. So straight in there, guys. No having to think about anything. No calculating the values. No worrying about the market moving. The calculations all done for us automatically. If you're going for a price stop, so let's just say we want to go long here on USD JPY. We're around about 11667. We want to go for a stop somewhere down here, so below this low, so 115.45. So it's really simple. Just pop in here, price stop 115.45, and let's just move this up. Obviously we wouldn't be risking 10% of our account, but I just want to show that the volume's calculated based completely on the price stop for us automatically. Pip target, we can just change this to 1000 and just click the buy button, and that's the trade sizing done automatically, and we can see it. Probably going to blow the account based on the leverage there, but we can see that trade down here. So there's the entry price that we got, 11670. Our stop loss 11545 with our lot size calculated automatically. And I'll just close those down now just to make things simple. Is there anybody want me to look at any particular scenario? I think I've just seen. Let me just have a look at these questions there. It doesn't allow us to take pending orders. Matthew Nigel answered that. Um, okay, I think they're all covered. Yeah, we did have a much more complicated version than this before, guys, that allowed us to take two different trades at the same time and spread the risk across the two trades and decide which percentage. And we had trailing stop options, etc., etc. But Nigel and I looked at it and just said, I wouldn't use that. And we just came up with this. In the end, we came up with um, this risk manager that we just both use this. It's so simple. Just try and look at it over here on this is a spread betting account now, which I'm more familiar with. So this is a small live account that I use for well, I used to use it for the Three Little Pigs one-on-ones when I used to do them. So if we go for a fixed amount here and £30, and we go for a pip stop of say 60 and an open target of say one. Let's yeah. So basically £30, 60. You can just see it automatically calculates the volume for me. So if I go in and I change my stop to 90, there's a rounding because I can only trade to so many decimal places here. And if we change this to a stop of 20 pips, so all of the volume calculation is done for you. As I say, if you trade standard 20 pip stop and a 40 pip target, all you have to do every time you want to trade, you just open the window and you click buy or sell. There's no need to get your stop loss sorted out. There's no need to worry about your volume. And then with this, it just opens up and you click buy or sell. And there we can see the order. You can see it at the bottom of the screen anyway. So if we want to change this to a percentage, we can just put, I don't know, 2%. And we can say, okay, we want to go, let's say we just want to, I don't know what currency this is, but if we say we want to go short here, so we're short here 104.88, I don't know what it is, or so let's say we want our stop above this high here, so 105.75 or something. So just simply price stop 105 1.0575 works out the volume for me, and straightforward sell, and that's my order in, all calculated and all done for me. Oh, sorry guys, my printer's just kicked into action there. So how much is it to purchase, Brendan? It's included in pro membership. Let me just go through some questions there. I don't use IG index, but if IG index has MT4 Basil, you can use it. I know they have. I don't use IG index MT4. Can it be used for pending orders? Michael, I don't know if you've just joined, but we covered this off. Originally, we had a whole load of. This was really, really complicated before. And what we did, it was just, we had pending orders in there. We had the ability to put two lots in and split the risk between the two lots and have different trailing percentages, etc. for that. And Nigel and I just said, look, I wouldn't even use this, so I'm not going to even think about offering it to anybody else. So we just came back to something that we'd just both use. So for example, if we the insert indicators, hang on a minute, let me just look over the pivots was think over on this account. Pivots scanners USDJPY. So insert indicators. average indicator. So it's not USD Swiss. Okay, none of these are coming off anyway. But if we just say that we're going to use a percentage here, and the main reason we did it is because we and most others we found are just sitting, usually putting the trades in at the screen. So if we just say that this pivot's trade's coming off now on the short side, so all we have to do is the price stop of 1.06374, and basically pip target will be the R1, which is 1.0529, 1.05292, and we just sell, and that's basically just entered our pivot trade for us there straight away. Oh, actually, I got that wrong. I got the wrong value in there, but anyway, we can see that the lot size is basically calculated straight away. So it's only for instant execution. We haven't tried to this is what we tried to cover off before, all bells and whistles. We had the buy limit, sell limit orders in there, 2 different tranches, etc. And it was just so complicated that Nigel and I just said, well, we wouldn't use it. So we just fell back to this straightforward standard calculator here. Thanks. Guys, any questions there? Just like to take any questions at the moment. We put a link in at the end of the video, and we'll drop you an email. But basically, we're not sure what we're going to do with this this software at the present. But what we decided, Nigel and I, was that during January, anybody who is a pro member or anybody that signs up to pro membership in January will get this for free. So as well as the video courses, the MT4 indicators and scanners, and the weekly workshops, then anybody signing up to pro membership in January will also get this risk manager as well included in membership. After the end of January, we're not sure what we're going to do with it. Even if we're going to go down the route of selling it and supporting it, we're not 100% sure yet. But during January, anybody signing up to pro membership will get the risk manager included in everything else that comes with pro. Pro members, if you haven't got it yet, just let us know and we'll get it to you. Link for the new manager. Yeah, Basil, if anybody who is a pro member, just drop us an email there with your MT4 account number and we'll sort you out. And guys, I can't think of anything else that I want to add there other than just saying that this is something that we're both using. I just want to have a quick look at these defaults. So just to go through them again. So you can use the current balance or the equity balance. You can specify a percentage of your account or a fixed amount for every trade. I think Nigel uses a percent of his trade. Basically, I decide at the beginning of the month how much I'm going to risk on every trade. So I would use the fixed amount here. So I would ignore the equity risk percentage and fill in the equity risk fixed amount. Pip stop, typically I'm going to use the price stop. So I don't need to worry about, and the pip target I can just leave as 1,000. So all I need to do is to put the fixed amount, £100, and I need to specify price stop. So that means that every time that I open the window, all I would have to do is, that should recalculate it from those. It just did. I was just a bit too fast. Okay, so all I have to do when I want to place a trade is open up the window, put my price stop in, and then decide if I'm going to buy or sell. So opening up a new 3 Little Pigs trade, for example, and I wanted to go, I need to put the risk manager on here. So if I've got the fixed amount of 100 and a price stop and a pip target of just say 1000, then it just means that if I want to go into a 3 little pigs trade here, all I have to do is work out my stop loss. So let's just say it's 1.0171. So price stop 1.0171, and then just click the buy, and it will calculate everything for me. Should do. Okay. Don't know why that's not working there, guys. Invalid stop. Price stop. Because I clicked sell. Did I? Okay, it's gone through. Sorry, there was just a small delay there on the execution. I think probably just because it's a demo account, the execution's crap. So apologies for that. Thanks. Magic number, that's just something that every expert advisor has to have on it. I don't know why it has to have it, it just has. If you look at any expert advisor, they will have this magic number on it. So nothing magic about it really at all, Edward, I don't think. Matthew probably knows, so it can manage trades. There you go. Okay, guys, so that's it. That's how we manage our risk. And that's how we just keep it simple. Basically, we open this window now, typically enter our price stop, and we just click buy or sell. And then, as I say, any open trade, you just manage it as you would any other MT4 trade. And if you sign up, if you're a pro member, you'll get it for free. So just drop us an email with your MT4 account number. And if you join up to pro membership in January, we'll also get it so you can start managing your risk properly from at least from this year onwards. So that treats them all differently, what Matthew said. Okay, all right, guys. Well, thanks a lot for coming along. If you've got any questions, just drop us an email, and we'll be here to answer any questions. Thanks for watching.